Welcome back to your personal finance classroom, where we break down your money questions to make it easy for you to live your best life. Don't forget to subscribe and hit that notification bell so you can be notified when new videos come out. And if you found this video helpful, don't forget to like it. Investing is a hot topic. You've likely heard trending buzzwords like crypto or NFT associated with investing. And maybe you've heard both the success and the horror stories of investing. Today, we're going to discuss some of the good and the bad of investing and talk about why, yes, you should invest. Because that's the short answer to the question. Yes, as long as you aren't putting money that you should be spending on groceries, rent, or other essential living expenses toward investing, investing is actually a really smart wealth building strategy. Even if you can only put a few dollars away a paycheck, it's worth it. Investing is buying something with the hope that it will increase in value. There are a lot of different ways to invest. You can invest through stocks, bonds, mutual funds, real estate, retirement funds, ETFs, and so on. It's important to note that investing is a long-term strategy. It isn't a get-rich-quick plan. You need to be prepared to commit time to seeing your investments grow and your wealth build. Consistency and commitment will make all of the difference when it comes to investing. Consider each dollar you invest an employee of yours. You're putting that dollar to work to recruit more dollars to come and work for you. And then those dollars will, in turn, recruit even more dollars to come and work for you. All you have to do in this process is put those initial dollars to work. The dollar employees are doing the bulk of the work. Make sure you check out our video on what is investing, where we dive deeper into what investing is and the different ways you can invest. In general, there are 3 things that you can do with your money. You can spend it, you can save it, or you can invest it. When it comes to saving and investing, saving is generally the safer option, but not necessarily the smarter option. That being said, saving is important. It's recommended to keep an emergency fund in an easily accessible savings account, as well as any savings for goals in the near future, like a house or a wedding. But beyond that, any money that's sitting in your savings account is doing just that. It's sitting in a savings account. Even if you get a small percentage back for keeping your money in that savings account, your money isn't working as hard as it could be. Remember, when you invest your money, you're putting your money to work for you. The hope is that whatever it is that you've invested in will increase in value, which will mean profit or income for you. You earn money on your investments when they increase in value. Let's say, for example, you bought stock in a company at $4 a share. You purchase 10 shares and spend a total of $40. That company grows, continues to make more money, and becomes more valuable. A year later, each share of the company is worth $6. Your 10 shares are now worth $60, and you only invested $40. If you were to sell, you would make a $20 profit, excluding taxes, or you could leave your investment and hope that the company continues to grow and your investment is worth even more money. You can also earn money through dividends. Dividends are when a company shares a percentage of its profits with shareholders. Though most of the time those dividends aren't guaranteed, companies might decide to pay out dividends if their profits for the year were good. They can either be paid out in cash or be reinvested. And it's important to note the power of compound interest when it comes to investing. When you invest, you're giving your money the opportunity to benefit from compound interest. Compound interest is when your earnings generate their own earnings. And the more time your money has to compound and grow, there's greater opportunity for that money to earn more money. This is why investing is a long-term strategy. Investments benefit from time. For example, if you invest $1,000 in a long-term bond that earns 3% interest every year, at the end of your first year, you'll have earned $30 in interest. You'll now have $1,030. In the following year, you'll earn 3% interest on that $1,030 instead of just the $1,000. It will then grow a little bit more to $31.40 that next year, bringing your total to $1,062.80. Compound interest benefits from time. If you let that $1,000 just sit there for 20 years, that $1,000 can become $3,262.04. And that's without any additional investments. If you continue to invest regularly, that money would grow even more. So, if investing is such a powerful wealth building strategy, why isn't everyone doing it? The honest answer is that investing is risky, and while most of the time the benefits outweigh the risks, people aren't often willing to take the risks. Risk is the chance of your investment producing a lower than expected return, or even losing value. Different investment types have different risk levels. There's no guarantee that you'll make money through investing. While the value of your investments can increase over time, they can also decrease in value over time. The general rule of thumb with risk is that you can be riskier with your investments when you're younger and decrease that amount of risk as you get older. The lower the risk, the lower the potential returns. But it's also true that the higher the risk, the higher the potential returns. But like we said at the beginning of this video, the answer to should I invest is yes. Yes, you should. Majority of the time, the benefits outweigh the risk. With time, patience, and consistency, an investment strategy can pay off big in the long term. Literally. One of the best things about investing is that you don't need to start by investing a lot of money. You can get started with just a few dollars and gradually increase your investments the more comfortable you get. It's important to say once again that as long as you're not using money that should go to essential living expenses, it's generally a good idea to start investing as soon as possible. Time plays an important role in investment success. So if you're here watching this lesson, this is your sign to get started investing now. If you want to learn more about investing, check out our lesson, What is Investing? Don't forget to like and subscribe. We'll be back Wednesdays and Fridays with new personal finance lessons for you.